Hi guys, I'm Lynette Zang, Chief Market Analyst here at ITM Trading, full service physical gold and silver dealer. And you got me again solo for today's Q&A. So I'm just gonna dive right in. First we'll take the question from Dustoff. Is keeping your emergency cash, gold, silver in a bank deposit box a good idea? If the banks close, won't they refuse access to deposit boxes? Yeah. I don't hold mine in a bank safe deposit box. I hold mine in a private safe deposit box. And I just think that I'm more comfortable with that. I'm in Phoenix. There are two here. You need to just check locally where you have it, or maybe even having a place to hold it in your home where it's easy for you to access. But I don't really think it's a great idea to have it in a bank safe deposit. They will refuse access. Historically, they do. You may have access for a minute, but yeah, if the banks close, how are you going to get it? So that's going to be a problem. Plus, the federal government has the option of going in there because they're federal banks. So I personally prefer private. That's the way I hold mine. And 47 Retta asks, what happens to people that default on credit cards after SOFR takes effect? Likely the same thing that happens under LIBOR, because what the SOFR is to replace the LIBOR, and what the LIBOR is, so what both of them are an interest rate benchmark. That's against what interest rates get charged on those credit cards or mortgages or anything else. So I would not imagine that would change if you default on your credit card under LIBOR. It's going to be the same, most likely will be the same thing under SOFR. And Neo asks, do the meme stocks like AMC still have a chance to force the hedge funds to short through this reset? You know, I'm sorry, but you're not big enough to go against hedge funds. I'm not big enough to go against hedge funds. And even if you do force, no, I don't think so. I don't think that the meme stocks like AMC still have a chance to force the hedge funds to short. And for those that don't know what short is, it's selling something that you don't have to control the price. And the theory is behind that, you push the price down, then you go and you buy it at a lower price, and you close out your short. In other words, you deliver the stocks that you didn't have to begin with when you sold them short. And what's the mechanism by which this plays out at the two ends? Well, honestly, this isn't about hedge funds. This is a currency life cycle issue. So what we're seeing here is, think about this. How many trillions and trillions that we don't even know about, but even that we do know, like 20 trillion, sorry, Edgar, of this being printed, right? Now that's a lot of liquidity, right? Liquidity, all of these dollars to buy up all of these assets, and basically they were doing this for free at a 0% interest. So that game is over. Make no mistake about it, it's over. So when you're looking at a meme stock, or you look at vigilantes against the hedge funds or any of that, I don't waste my time on that, honestly, because that's not what it's all about. And even if you do make lots of these, if you can't convert them into anything, they are worthless. Look at Zimbabwe. You can be a billionaire and not be able to afford 3 eggs. So, the reality is there is a lack of liquidity in the markets. That means the ability to easily buy and sell without creating big, huge, volatile price swings. The biggest risk that we're running right now is the lack of liquidity in the treasury market, because the treasury market is the foundation of the entire system. And what we're getting now are a lot of central banks talking about forced selling. So in other words, the markets go down, they get a margin call, they have to sell what the markets will buy. So they may have a whole bunch of illiquid garbage over here, but they can't use that to raise capital to meet those margin calls. So they're going to have to sell maybe treasuries into a market that there's not enough buyers. That's the problem. There's not enough buyers. So this is how it plays out. The dollar loses all of its value because people, the public, loses confidence in the government, in the central banks, and then these things. And obviously this is not real. I should say that this is movie prop money, but it's the same thing. It doesn't mean anything. So all confidence is lost in this, and then we end up in a hyperinflationary depression because they have no tools. They're going to try and create more tools just like they did in 2008 when they started QE in 2009. So they may or they may not, because there's no purchasing power left. And interest rates, yes, they're raising them now. Why? So they can lower them again into a crisis. So they're pushing us into a crisis, and then they're going to drop interest rates and do a pivot and do all of this. But the confidence, it's that confidence piece. That's why they check it all the time. That's how, this is how this plays out in a hyperinflationary depression. You better have this, and you better have this. When we are in that position, you also better have food, water, energy, security, barterability, community, and shelter. This will do your wealth preservation. You better have it. And so, by the way, if you haven't already, click that Calendly link below and set up your own individualized personal strategies. And it starts with your goals. Are you trying to sustain your standard of living? Are you trying to get into a position to take advantages of these opportunities? Are you about legacy building for those generations that are coming after you? I mean, I can't answer those questions for you, but those are the kinds of things that you need to be talking to one of our consultants about so that they can help you formulate a strategy that makes sense for you and then execute it as quickly as you can. That's what's playing out. That's what's playing out. You will be losing choices, Neo. You will be losing, we will all be losing choices that we have today can be gone in a heartbeat tomorrow. And we're close. PlantVids asks, do you think they will stop paper trading gold? If they did, would that be a setup for the reset? And I mean stopping trades of metals and commodities. You know, they have tried, over the course of time, they control the paper price of gold. Will they stop trading it? No, they won't, because that's the mechanism with Wall Street and the banks helps to control the visible price that you and I see. Even as those premiums expand, because when you're working in the physical realm of all this stuff, this is physical. There's a finite amount of it. So this is a true demand supply market, and demand is growing. If you've been watching my videos recently, I've been showing you that there's been a flight from fiat money products into the real thing. And I think it's just beginning, but I think that's going to heat up more and more and more. So no, I don't think they will stop trading paper gold because they got to control the price. And if the price were purely dependent on the physical markets, the prices would be a lot higher. And if they did, would that be a setup to a reset? It is all, they're not going to stop trading them, and it's still a setup to the reset because the system no longer functions. We need a new system. And the system that they're driving us to, well, if Klaus Schwab has his way, it's pretty ugly and nasty. And what I think is also really interesting is that all the talk right now is on deglobalization as the supply chain issues continue break down. And so they're deglobalizing the supply chain at the same time that the G20 and the World Economic Forum want to go into a one world money system and a one world system of control. So look over here at this deglobalization and don't realize that we're doing just the opposite over here with our monetary system. I'm telling you, you got to have physical. It's got to be outside of the system. It has to be. That's the only way you're going to really be able to protect your wealth and your purchasing power at all. And Hardcore NZ asks, hi Lynette, I have a lot of my retirement in GLD, which has saved me big time in this crash. Would it go up with gold or is it paper gold and go down? GLD is simply a trust. That's all you own is a share in the trust. You do not own the underlying gold. It is designed to track the spot market. So whatever the spot market does will be reflected in your GLD. But Hardcore NZ, you gotta understand you don't own gold. You own shares in a trust. You don't have the access to the underlying gold, whatever there might be in there. So, I don't own any GLD. And Edgar, we'll put up a chart, a relative performance chart of GLD versus spot gold. And I'll pull that up so that it's pretty current. And you will see that every single day, daily, read your prospectus, they sell off some of their gold holdings to pay the fees. They do this daily. You don't own gold. So in your retirement, part of what you're looking at here in your retirement is a lot of people will do, I don't know, you said in retirement, so maybe it's in an IRA or a SEP IRA or a 403B or a 401k. I don't know where you're holding it, and I can't tell, obviously, from this question. But I want you to think about the taxes that you would pay on it now while they are suppressing the price versus when they do that overnight reset system and gold begins its move toward its fundamental value, which is substantially higher than where it sits right now. What would you like to pay your taxes on? That's the question you have to ask yourself because it's just smart planning. Personally, I had an IRA, I had a SEP IRA. I liquidated that. I still have a strong retirement plan, but guess what? It's in my possession and my control, and it's invisible to everybody. I paid my taxes. You got to pay that. But just think about it, right? I would rather pay it at the suppressed price than I would at its full fundamental value. Just saying. So I'd like to wish everybody a very happy Thanksgiving. If you have not already, make sure that you subscribe and hit that button. We'll let you know when we're going on air. And make sure to watch last week's video on the central bank's warning of forced selling. This is a very big deal because they're really letting us know that they expect a market crash. And I was there in '87. I know what that's like. That they are warning us, and more central banks are coming out and warning us. So they're getting nervous about it. But this way they can't say, well, we didn't warn you, because they are. So take heed on that. If you are sitting in these markets, in these paper markets, take heed. And also make sure that you watch one of the single most important videos that I've done in a long time and I've done a lot of important ones recently, but about Treasury market liquidity, because Treasuries are the foundation of the entire global system. So if they stop trading or they freeze, that's it. It's game over, and they're nervous about it. So make sure you watch that video if you have not already, or you might want to watch it a second time. And finally, don't forget to visit BGS, Beyond Gold and Silver, for my interview with Marjorie Wildcraft, where we talked about how to get your medicine for free. We need to know these kinds of things. I mean, it may sound crazy and outrageous, but if you know what to look for, food, I put medicine in that same category underlying of food. Food is the single biggest issue for people as we go through these transitions. Medications are the second, medicines are the second. So you're going to need to figure out how to be as independent and self-sufficient in both those areas as possible. And that's what we talked about. So don't miss that video. And if you haven't already, again, click that Calendly link below. Set up a time to get your own strategy in place and then execute it. Please, as quickly as you can. We are seriously running out of time. Seriously. So leave us a comment, give us a thumbs up if you like this, and share. And until next we meet, please be safe and have very happy Thanksgiving. Bye-bye.